In today's video, I want to go over how to buy a call option. So let's say you get that alert and it says buy to open, Apple, February 19th, 2021, expiration 135 strike calls for X amount. How do we do it? So the first thing is we'll go to this trade tab. This is TD Ameritrade Think or Swim. If you're using the web-based version, you will go to the trade tab too. Next, go to all products. Now, this gives us the option chain. What this means is this gives us calls to the left and puts to the right with different expirations. So we'll go ahead and pick out, let's just make that clear, calls over here and then puts over here. Then you'll go ahead and pick out the expiration. Since we have February 19th, 2021, we'll go here. They are white. The weekly options are in yellow on TD Ameritrade. The only time you really want weekly options is if it's stated on the trade alert or you want to single out that week. Maybe it's earnings, maybe the stock has a news conference and such. But most of the time, we will look at monthly expiration, not weeklies. You know, weekly options, or short-dated options, I should say, especially weekly, are high risk, high reward. And this will also give us the days to expiration. So we'll go to February, and then we'll look here at the 135 strike calls. So these are the calls that are pretty much at the money. We say at the money when they are, excuse me, right at the money. Get it? We will call these options in the money over here because they're in the money with the stock at 134. And all these options here will be OTM, out the money. So in the money, out the money, and then ATM, at the money. Again, risk versus reward setup, the higher in the money the options are, the higher probability they'll finish in the money, but they'll be more expensive. So keep that in mind. So if I want to buy a call option, I will go over here. Remember, this side is calls, and I will click here on the ask. When you buy an option, you will pay the ask. When you sell an option, you'll pay the bid. So I'll click on it. And the next thing I want to do is review my order. Now, if you're using the web-based version, same thing. Make sure you review it and make sure everything is correct. So let's walk through it. Single, because we are buying an outright call, not a spread. It's labeled single here too. We want to buy. We want to look at our quantity. I want to buy one of them. If you want to buy more, there's a drop down, or you can do your position size as you want. Next is the symbol, Apple, AAPL, expiration, February 19th. Strike 135, type call, price 415. Let's say I want to buy this cheaper. What I can do is scroll down. Maybe I want to pay $4. Will I get automatically filled? No, because the market, the mid and natural price, remember we clicked on the ask, and we can actually go and see it here, is $4.15. I could get filled at $4.10 maybe, but if I want to buy it right now, I will pay that full ask. I may be able to get filled at $4.10 as well. Apple has about, we call this the spread. It has about a 10-cent wide spread. Very liquid. Next thing, I'll go to my order type, limit or market. Market means it will fill me at the market price. So it may be $4.15. It may be more, maybe $4.20, maybe $4.25 if Apple starts going up. But I usually like limit orders, day order. This will cancel at the end of the trading day, so 4 p.m. Eastern. Good till cancel will be maybe tomorrow. Apple this call option is trading at the price. Maybe I put it in for $4 and I do a good till cancel. Maybe tomorrow, if Apple stock slightly goes down, then I'll get filled. But usually I use day orders. Exchange best, don't worry about that. So next thing I'll do is go to confirm and send, and it will just reassure me that everything is correct. Order description by Apple. And you might be wondering, why does it say 100? Remember, each one option contract equals 100 shares of the stock. February 21st, February 19th, 2021 expiration, 135 strike call at 4:15. And next thing I will do if I want to complete my order is click send. Pretty easy. Buying outright calls and puts are very easy to do in the options market. I would say it's the simplest trading order to do. As you start getting into more advanced option strategies, that's when you'll see spreads and like bull call spreads, call flies and such. But outright calls, in my opinion, are one of the best forms of trading that give you the opportunity to make money if the stock goes up without actually buying all the stock itself.